Good morning, traders. It's 8:02 a.m. Chicago time on Thursday, the 12th of May, 2022. This is episode number 2232. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. Looking at the pre-market summary sheet this morning for convergent trading, we have a mild risk-off market. Something goofy going on with this graph here. We're seeing pretty good selling across the Euro Stocks 50 and the DAX down 2%, over 2% each. We're seeing metals get hit a little bit. Copper losing another 3%. Crude oil off, but still pretty strong above the $100 mark. The NASDAQ is the worst performer yet again of the U.S. indices. It was in that position yesterday as well. And the main driver for today, it's just continued selling. But we're also hearing from retail broker-dealers that the retail or the individual investors actually buying these dips. So sentiment from that segment remains relatively strong. Even though the market's just been kind of pushing and pushing. PPI came out this morning. Also, GDP out of Great Britain. What's the deal here? GDP out of Great Britain came in at 8.7% prelim year on year versus 8.8 expected. The U.S. also released its PPI month on month for April, came in at 0.5% in line. Core PPI came in at 0.4% versus 0.6%. And so I guess the numbers I was seeing were not correct. Now that I refreshed the screen, I could see the correct numbers. But PPI actually, in fact, didn't come in hotter. We did sell off a little bit right before that number, and have been trading sideways ever since. The key piece, initial claims came in higher than consensus, 203,000 versus 195,000. Of course, this number, the higher the claims, the worse it is, the more people that are filing for unemployment benefits. And we have Fed's daily at 4 p.m. this afternoon. Turning our attention to the S&P. The S&P has traded 403,000 contracts. Again, very heavy volume, not extremely heavy. We've seen much, much bigger volume in the past couple of years. But the volume is very heavy already with a pretty wide range, 69.5 points, as I talked about over and over in these sessions. That the reason we track that is because it gives us an idea of where the type of activity that we expect to bleed over into the day session. So we're expecting a relatively wide range, wider than what we would normally expect for the S&P, around 60 points. It's already covered that. This 60 points here is RTH only, RTH. This is overnight session only at the 69.5. But generally, we have as wide, if not wider, range in the overnight in the day session than we do in the overnight session, as a rule of thumb. Better than 50-50. Not sure what that stat is. So I'm using that as a sort of a guide for what to expect today. So what are we expecting today? Expecting it to be relatively active and moving, and it's another continuation of what we've had over the last few days. In terms of earnings, really, there are a few players here, but nothing too major. Most of the earnings are behind us at this point. Okay, so I'm not too concerned about earnings anymore. Looking at what was discussed yesterday. Couple things. We had 39.5 being the SOC for CPI. So there were two key trades yesterday, and the two key trades were the primary is a pop higher that finds resistance around 40.10, 40.20, and fails through. pushes through the 39.80. We expect some support at 39.80, pushes through the 39.80. We expect to get short, looking for around 39.04 as a target, 39.04 as a target. The secondary scenario, which is the responsive scenario, was it might bounce off of 39.80 early on. It might push to 40.20. But if it gets above the 4,000 being the key line in the sand, if it gets above 4,000, I'm looking for a long at 410. That's the big trade. A long of 410 or short at anywhere between 39.90 and 4,000. So the first trade, short 39.90 down into 39.04 or so in the runner. And the long trade is 40.10 to the SOC at 39.50 and the 40.40, which is the overnight point of control. Neither of these look very good, of course, at the open, and that's just usually the case. But as we see here, it definitely did the job, right? So yesterday, this is the day session. Let me just fix this. The day session, we open and we immediately respond back up. So we push down through the 80 down to 65.50, and then we squeeze into that 40. So there's scenario 2 being done. Then we fall through the 4,000 right here. So double bottom at 4,000, fall through the 4,000, and there's the trade right there. This is the trade right here. You see that little poke back? This sets off scenario 1. This push through the 4,000 and pull back to 40.10 sets off scenario 2. Okay, if you're patient, which I was not, if you're patient, then you got scenario 2 on the push up. Then it broke through the 4,000. Then it pulled back through the 4,000 to about 4,003.4, gave us the short for 39, for an initial test of 39.80 again, to play the 39.80 again for about 20-ish points, 15 points by the time we get in. And then we're looking for 39.04 down here, which we couldn't get. We got that tonight, but pretty decent range nonetheless. Yesterday, it moved about 70 points from that 4,000, from the 4,000 level. So pretty decent performance versus what was expected. Looking at the bigger picture, again, we see that the last 2 days value areas have overlapped. There's value there that got stretched. And look at what it's done yesterday. Here's value for yesterday. There is a weakening indication. There's an indication of weakening in the selling. So we continue to sell. The one-time framing continues lower. Lower high, lower high, lower high, lower high. So the trend is lower on the daily, weekly, and monthly. So that's the flow of trading currently. But as we could see, we're overlapping in our value. And so the fact that we are trading down here this morning leads me to believe that we are very likely to come back and test where? Test that 39.80 area from below. Looking for the 39.80, which gives us the confluence of this area right here. I'm expecting it to come back and retest. I'm expecting the market to be responsive mainly this morning despite the sell-off. So it's been kind of sideways, choppy, and so on, as we can see in this chart. You got pretty strong selling right here. Look at those big lots, big lots, big lots, big lots, big lots, all the way down. Lots of heavy selling here, right? Just pretty good selling, just rapid selling. So we got a lot of big lots pushing through the low here, right before the PPI number. There's just a constant feeding of news. Gazprom is threatening because Finland's joining NATO and Sweden's considering it. Both of them have tried to remain neutral. There's a play that on Gazprom starting to cut down on supply of energy into Europe, and so on and so on and so forth. It just doesn't end. There's also news out of OPEC. The forecast, the oil demand forecast, revised down by 300,000 barrels per day, and so on and so forth. So anyway, the market sells off. We get CPI, the PPI. PPI comes in a little bit better. We pop, and we have gone sideways. We're on top of the overnight point of control, which is at 3,900. This red line right here. And yes, we are selling. And throughout the night, it has respected mid and VWAP. And we are sitting sideways on the low. So the trend is down. The trend is down. We could see that we are forming lower highs, lower highs, lower highs with every peak. So I'm not saying get long looking for responsive right away. But I'm going to tell you that the way the profiles are setting up, and we don't see this in the, open, high, low, close bar, whether it's a candlestick or Renko or just a regular bar. We don't see that information, but we do see that in the profile, we do see some support in terms of value migration, or a slowdown in terms of value migration to the sell side, and it is likely to act as a magnet to bring prices back up. The over-under currently, the over-under price right here, the over-under stock zone is at 39.50. This is the key number. This happens to be the overnight high. If we take this 39.50, the pullback, I'm going to look for a pullback long back to the 4,000. This is a key trade for today. So we have to be patient here. There are probably some scalps, breaks through the mid, pulls back to the prior high. There's potentially a good long, get out at the wherever the high was, wait for it to push through the 39.40 and maybe hold through to the 39.50 and catch a break and a runner for, a 50-point trade. But this requires quite a bit of patience, which I have not been exercising lately, and my results show it, unfortunately. Kind of out of sync with the market. But overall, the narrative is very clear. We've got these lower highs, lower highs, lower highs. And on the pushes down, it's now respecting the full session mid. If we take that mid out and it starts to push through this last high, the pullback is a ripe long for me. This is not a recommendation to trade. And it's not a recommendation of a trade. Follow your plan, but that's how things are looking. So currently, we remain under mid. We remain under VWAP. We are on top of the overnight point of control. We're opening out of range. Yesterday's lows, 39.23, right up here. See this green tab right here, this green line? That's the prior low of day. So we're opening we're opening out of range, and this also means that we're likely to open in an open auction out of range because we are on top of the overnight point of control. And you can see there's a consolidation and compression, but in that compression, we've got higher lows going here, right? So to me, this is very likely to test lower, as the market comes in, with the numbers being where they are. The S&P is down 66 basis points, the NASDAQ down 131 basis points, the Russell down 36 basis points, and the Dow, which has been remarkably relatively stronger, is down 28 basis points. We're going to get market on open orders that are going to take that into account and flush out. So looking for that push, but if we get back to the overnight point of control on the open and push higher, I'm looking long for today. That's just how I'm seeing it, okay? Trade your plan, but that's what's setting up. So looking at what we did yesterday, We've kind of reviewed what we've had yesterday. There it is. Oops. There it is. We opened. It's really an open auction yesterday. Crosses through the day generated levels. Looking to the long side, looking for that scenario 2 to play out. Really took a freaking while for it to get to the 40 target. The CPI, SOC. Who can tell me what the SOC is? What is an SOC? Pop quiz. What is an SOC? What does that mean? We pushed to the 40 SOC for CPI, right? Scene of the crime. That's the place where the auction was interrupted by external forces. So you have people who want to buy. There are normally 3 participants in the market, right? Can you name the 3 participants in the market? I bet most of you will get these wrong, simply because I haven't covered it very well. What are the 3 participants in the market? Real quick, we don't have very much time. What are the 3 participants in the market? Come on, people. At any given time, it doesn't matter what the time frame, there are 3 exactly: buyers, sellers, and the potential, the third force. So you have people who have bought, you have people who have sold. We can see those people on the tape. We can see their prints. You've seen the tape on my Edge Pro X platform. We can see them in the tick chart. We can see them in the delta. We can see them in the prints. We can see them in many, many different places. I'm not talking about participant types. Who are the actual participants? People who buy, who've bought, people who have sold, and then people who want to buy or sell. This is called the third force. Those are the people that generally will ring your bell when hitting your stops. So you have these three participants kind of always there in the market, always ever present, right? Hey, I'm one of these third forces. If I don't have a position in the market, as soon as I click, my trade shows up to everybody, because we're trading futures and it's a level playing platform field. Everybody gets to see everybody's action. And so what happens with the scene of the crime is those 3 participants are interrupted by an inflow of another piece, a major piece, which is news. And the participation changes dramatically. Buyers become sellers. Those who are on the side may become sellers. Sellers become buyers, and so on. So that interrupts the flow of the auction, the natural flow of the auction, and we call that, so that's the crime. The crime is CPI came out, FOMC came out, unemployment, the German zoo, whatever it is, ECB, depending on your product. And so that's the interruption. That's the crime. And what happens is the market moves away and reprices this new information, and we retain this last price, the very last print. And I look at it on the heat map on Edge Pro X to see what the last print was before the sweep. And that's the scene of the crime. That's the last price that was traded before the auction was interrupted, before the natural flow of traders and trading of participants got interrupted. That's the scene of the crime. For CPI, the scene of the crime is 39.50, 40.39.50. And then yesterday, we happened to have the overnight point of control at 40.40. So we were trading in this area in anticipation and waiting for CPI. Boom, we broke out. And then yesterday, here it is. We decided to go back and check out the scene of the crime. So we went to 40.45 during the day session right here, 40.45. Once we were done, we pulled back to the mid. Beautiful pullback there. Retest, lower high on the retest, and there was no buying left. And boom, we have a nice structural short. The better short, of course, is the break below the 4,000, and there's your trade. That's the setup. We talked about the 4,000. I talked about it till I was blue in the face yesterday. 4,000, major, not because it's a millennial level, but we can see from the overnight session that it's getting a lot of respect. That respect is confirmed here, confirmed here. So as soon as it breaks out, we're looking for the pullback, get an advantageous price, define risk, take your shot, let it go, and then the target becomes the IB, and then it becomes that 39.04, which it didn't get to, got to 39.23 or something like that. Very, very clear. So a lot of this volume above 4,000, this box above 4,000 had a lot of volume in it, and all of that volume, not all, but a lot of that volume gets flushed out. Short-term volume gets flushed out, and it makes for an exceptional trade, right? So that's yesterday. I've talked a lot already. Let's get to what's expected for today. Just setting up the chart here. So for today, we have some interesting action here. Hang on, I need to switch my chart to 20 ticks. Market makers are just buyers and sellers. They have the same motivation. Okay, so to define the landscape, here's my price map. My price map is I have an over-under line of 39.50. This is very important right here. This is going to tell me how the mood has changed. This I have a major support level for today within today's range at 38.54 or so. There's a band there. There's, you know, there are single prints and a bunch of other stuff happening down here. So I'm expecting the market to get support there. That's for scenario 2. For scenario 1, let's squish this thing a little bit. Here's the magnet right up here. The magnet's right up at 40.20. I'm looking for an open auction out of range this morning. I'm looking for this thing to flush a little bit back into the overnight point of control of 3,900. We expect a battle at the 3,900, but at some point I'm expecting it to break through, break this high right here, this high at 39.19, expecting it to break that high, which is also a band for yesterday's low. The structure here is beautiful, guys. This is like you want to take a snapshot and put this in a textbook. The structure is beautiful. The last swing high in the overnight session is against yesterday's low. I expect a breach of that, a pullback with a higher low. Look for a trade long. Look for that 39.23 to go. Back to prior settle. So now we have a prior settle that's done. And the idea is it pushes 39.50, struggles there, gets above, and it sets up a second trade potential for a squeeze to 4,000. So we're looking at a trade between 39.20 and 4,080 points, looking for a range of about 120 points on the session to get to 4,000. There it is. That's your scenario 1. I believe this is a very strong possibility and a very, very, very great risk-reward trade. Again, this is not a recommendation to trade. This is my opinion. Secondary, we push into the prior range. We squeeze to close the prior settle stat. We're unable to stay in the prior range, and we push below. And the idea, you know, I'd love for it to go to 39.50 for the turn on the second scenario. I'd love for this to be up here. It'd give us better security and better defined risk and a bigger trade. But if it turns sooner, like a prior settle or at this level right here at 39.40, that's fine. Looking for a short. The short will target the overnight stat first. That's a very high probability stat at 38.84, and then I'm looking for it to push down into the 38.54 area. So 38.54 becomes a target on the short side. These trades, in my opinion, can be taken with a 4-point stop with at least a 6R or better multiple. These are big trades. Okay, good luck. I know I talked a lot. It's tough not to with everything that's going on with the structure here. But today, I believe, presents us with some really beautiful opportunities. Good luck today, and I'll catch you tomorrow morning. Take care.